It goes without saying, stock markets have several hundred years of history and crashes have always been a part of it. They come and go. Even if the next financial crash is within the average decline, we should see the market fall by 40% at its lowest point. That's the best case scenario. The more money that gets pumped into stocks now, the harder and faster this will certainly fall. You came here for the truth, so let me unveil that for you. I've made some unpopular comments in the introduction, so let's get into it right away. Well, looking back on history, you can see the newspapers here from 1929, 1987, and 2008, and we see familiar terms, familiar instances of crashes. Wall Street in panic as stocks crash. Stocks plunge 508 points. Dow plunges through the floor. And markets plunge. We know the history. We've read into it. Now looking at this next chart, you can see how they all plotted this out here. Looking historically, you could see 22.6% drop in a single day in 1987, October. And nothing has really come close ever since. And of course, now they would never let that happen. The plunge protection team would obviously not let that happen. They don't even let it happen intraday. And of course, the markets would shut down long before that. But look how many times we see October coming here. And this is a one-day drop. This is not the biggest drops in total over a period of time. Look at this. All of these that I'm highlighting are October, and they're on the top of the list. So we do find historically that there are major crashes that occur in October. That doesn't mean it's going to happen. What I also want to note here is that we have the financial crisis 2008 that also comes up here significant number of times. And this is after we have been told that the markets are more steady now, they're more stable now, the Federal Reserve is able to control everything properly. We were told all this, but it happened during the financial crisis. The markets were about to be completely destroyed. They were about to be eviscerated. And yet, they reacted in this way. All right, let's switch gears. Let's go over to Europe. The Euro junk bond investors go nuts. All right. Junk bonds, okay? Think about what that means. A bond is already garbage. I wrote about this in 2 of my books. And if you can tell me that there is no risk, essentially, it's what you're getting no return on these garbage debt instruments. What a joke. Because, of course, during the financial crisis, we have a period of time when there's turmoil, we have all of this chaos, we don't know what's going to happen, and you could see that all of the debt instruments would yield more. They would give you more money for that risk. Look at Greece, for example. If you were willing to take on the Greece debt, you were going to be able to make a lot of money. But you don't know what's going to happen because they keep defaulting. They keep basically saying, we can't pay our debtors, so let's just wipe it off the books. Well, not going to get very far like that. This is garbage, okay? Garbage. Garbage. Debt is garbage. Do not get involved in it in any way. That's the best way to remain safe. All right, soft economic data surprise index. Moving upward here, hard economic data, surprise index. All right. Record high reality gap. Okay. The hard data and the soft data do not match up. And this has been a big problem here ever since basically end of the year 2016. It's just been getting worse. The hard data showing things are looking worse. I've seen these real fake statistics suggesting that everything's okay. Look at the GDP, all right? Was it 3%, if memory serves correctly? 3% growth, right? No. Obamacare expenditures continue to rise. And that has been one of the major contributing factor to why the GDP has risen. Nobody's talking about that. But the premiums continue to rise continuously, no matter where you are. I've covered that here on the channel. Nobody's talking about that. Why? It's a fact. It's a fact. And we're not allowed to talk about it. Not in the alternative news. Don't touch that. Don't touch that information. Very strange. Okay. I'm not going to get too much into this article. Essentially what we're looking at here is the fact that ATM fees are out of control. Looking at how bad this has become. Pittsburgh paying $5.19 for an ATM fee. The lowest average fees were in Dallas, $4. I mean, that's crazy. The average overdraft fee is $33. And they're trying to make excuses for it. They basically say that, look, there's less ATMs out there. So to maintain this network, we need to charge customers more. I can understand that. Except the fact that it's not true. Why it's being done? Because they make an infinite amount of money. All of these banking institutions, they increase fees to take from you. It's a negative interest rate is essentially what it is. You give up all of your money, all your savings, you get paid, money goes into the bank. And what do they do with it? They squander it. And then it gets worse. They created fractional reserve banking. They created derivatives on top of that. And they used your debt that they created out of thin air. Think about this for a second. You bank with Quintiri Bank, all right? And Quintiri Bank is there to be of service to you. So they will hold your money, your hard-earned savings in our vault, right? All right, so you deposit it with us. Thank you very much. I'll take that. And as a result, I'm going to give you nothing in return. Okay, no problem. You're going to keep your money with me. I'll keep it safe. I'll take that money and I will loan it out to someone else. So I loan it to you, or let's say person number 2, at interest. So I'm making good money off that. It's not even my money. And then I have your mortgage, that piece of paper. What do? I take that mortgage and I sell it off to another institution. I make money again. I didn't have any money in the first place because, you have to remember this, that money is created into existence the moment you take out a loan. The bank didn't have that loan. The bank didn't have that money. But it created the loan to you, and that money comes up out of nowhere. And yet they can continue this scheme every single day. Every single day it's a fraud, and people don't realize it. They deposit their paycheck in their banks because that's what everyone else is doing. What else am I supposed to do? Sure, do whatever the heck you want. This was an article that was brought to me by a subscriber. Canada sells off most of its gold reserves. I don't even know if I covered this back in 2016, but I just felt it was necessary. We just did that video yesterday about gold. A lot of people were interested in it. I thought this was important if you hadn't seen it for yourself. The Canadian government doesn't care about gold. The Canadian government doesn't even worry about their own central bank. The Canadian government gets bailouts from the Federal Reserve. Right? $19 million they had. That's it. 19 million. I'm sure there are many wealthy people around that own more than $19 million of gold. More than the entire country. It's interesting because it seems like certain countries are building up their gold reserves, mostly in the developed world. And then you see a country like Canada that's just selling off their gold. Who knows what? Is Canada in the right? Or is the developed nations in the right? I don't know. Time will be the judge of that, that's for sure. Qatar Fund is said to weigh asset sales as it looks homeward. One of the world's biggest buyers of trophy assets is becoming a seller. And that scares the hell out of the markets. Okay? Qatar's sovereign wealth fund is reversing a decade-long run in high-profile foreign investments to buttress its own economy. So perhaps they're doing it with their own interests in mind. It's not necessarily a nefarious act, but the truth remains that they're doing this. So I'm going to look more into Qatar because I think it's important with the recent escalations that have taken place. Let's not say too much. So stay tuned for more. That's all I'll say. And last but not least, love to cover what's happening with robots. In the future of fast food bites in the Big Apple, robots will replace humans and cash won't be accepted at soon-to-open Shake Shack in the East Village. So you're going to have to place your order via an app at a touchscreen kiosk, which is scheduled to open later this month. So you're going to be dealing with machines. Get used to it. I mean, we already do on a daily basis, but I definitely see that there has been an incredible uptick. It was sort of climbing, and then it just went parabolic. Maybe it's good, maybe it's bad, I don't know. You could tell me your opinion, but it is worrisome. So that's all for this video. If you found it informative, then please give me a thumbs up. When you give me a thumbs up, it pushes these videos higher up into the YouTube search rankings, so I do appreciate that. And last but not least, if you found this video informative, I know you will find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. Take a look at the links in the description below. Take care.